Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to another episode of Bitcoin Bulletin, where we dive into the world of cryptocurrency and explore its most fascinating stories. Today, we're going to talk about a fascinating case that highlights the risks involved in trading Bitcoin. Imagine you're sitting in front of your computer, staring at a seemingly endless list of numbers and symbols. This is what HyperLiquid Trader, a cutting-edge trading platform, looked like to its traders just yesterday. But now, it's facing a $100 million liquidation after an ill-fated bet on Bitcoin went sour. So how did this happen? To understand the events that led to HyperLiquid Trader's downfall, let's take a closer look at what happened to its traders. It appears they were heavily invested in Bitcoin, with trades ranging from thousands of dollars to over $2 million. Now, when the price of Bitcoin started dropping, it seemed like a perfect opportunity for some traders to cover their losses and make a profit. But what went wrong? The problem was that those who were short-selling Bitcoin, selling an asset you don't own at a certain price with the expectation of buying it back later at a lower price, had to close out their positions by buying back the same amount they sold. This caused a chain reaction, as each trader's sale triggered the next in line, resulting in an avalanche of sell orders. The problem was that HyperLiquid Trader didn't have enough liquidity or capital on hand to cover all these sudden and heavy sell orders. This meant that the platform had to liquidate its assets quickly to meet its obligations, leading to a massive $100 million loss for the traders who had bet big on Bitcoin. We see this play out in the price charts we're looking at now, where we can see the rapid decline of Bitcoin's price over time and the corresponding movements in HyperLiquid Trader's balance sheet. To understand just how much these sell orders were worth, let's look at some actual trade data. For instance, look at this trade that went from $103,594 to just $2,498, a loss of nearly 50%, or another one that started at $2.12 and ended up being sold for $649.70. These are just two examples of the numerous trades that were executed by traders desperate to cut their losses. But what can we learn from this story? Well, first of all, it serves as a stark reminder that trading is inherently risky, even with cutting-edge technology like HyperLiquid Trader. It also highlights the importance of risk management and having enough liquidity on hand to meet your obligations. If you're an avid trader or investor, I encourage you to take heed of this cautionary tale and make sure you have a solid strategy in place for managing your risks. And if you're new to trading, it's worth doing some research into the different types of trades and risk management strategies before diving in. Thanks for joining me on this episode of Bitcoin Bulletin. If you want more stories like this, be sure to subscribe and hit that notification bell. Until next time, stay informed and stay safe out there.